Bloomberg Audio Studios. Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
Taking a look at shares of Amazon, they are higher right now by 5%. This after the company reported net sales for the fourth quarter of $181.5 billion to $188.5 billion, and says they're seeing operating income in a range of $16 billion to $20 billion. That estimate was for $17.49 billion. Net sales online up 7.2% year over year. Physical store net sales up 5.4% year over year. AWS net sales 19% year over year increase. The coming in at $27.45 billion, pretty much in line with estimates at $27.49 billion. Let's see what James Cakmak has to say about all this and more. He's partner and tech analyst at Clockwise Capital. He joins us from Miami today. James, I do want to start with Amazon, and then we're going to get to what happened a little earlier in the week with Microsoft and Alphabet. What are your thoughts of Amazon at first blush?
Yeah, I think it's just a great story of what Andy Jassy has laid out basically about a year ago, that the path to profitability on the retail side of the business will continue and continue in a bigger and bigger way as they achieve the efficiencies across their fulfillment network and further optimize for shorter duration delivery times. So I think you're seeing what you want to see on the bottom line. The top line continues to perform more of on a status quo basis. So, we continue to like the name and pretty pleased with the quarter.
I know that the results just came in minutes ago, but one big theme that we were looking at just more broadly this week is whether these big tech companies are seeing the results in their earnings from all of the capex that they've done on AI. What does this Amazon earnings tell us about whether Amazon is able to kind of show all of the investments, the fruit of their investments?
Yeah, I haven't gone through it with a fine-tooth comb to gauge and assess kind of the returns this quarter. But I think that from a bigger picture perspective, you're not going to see a lot of trickle down to the bottom line or accretion to revenue on a short-term basis. I think that these are much longer-term investment cycles that will bear fruit over a longer term. So, that is a question that comes up repeatedly with investors. Where's the ROI? You're spending all this capex, but I think it just helps reinforce the competitive moats and will accrue over time. The way that we're looking at big tech more broadly is that a lot of these names have run up. We've been rotating out of these names for the last couple of weeks now, rotating into smaller cap names, more value oriented names, because you have expanded multiples, high expectations, as you saw with Microsoft, Meta. I think the correction today helped Amazon to a certain extent, that the bar had been lowered. But I think that big tech should likely remain choppy, at least for the interim, as we have uncertainties around geopolitics, the election, and just the sovereign debt situation.
So let's zoom out a little bit and talk specifically about AWS, because this is the number that everybody cares about. It was pretty amazing to see net sales up 19% year over year. We heard from Alphabet earlier this week in Google Cloud. We also heard from Microsoft with Azure yesterday. Amazon with AWS, James, they're the company that started it all. What's their competitive advantage? How do they continue to win business or compete against the second and third place, Azure and Alphabet? How do they maintain their position when there is so much competition out there?
Yeah, I think it's going to be more of a rising tide lifts all boats situation. Obviously is the number one scale player in the space, and all companies that are looking to the cloud, will utilize them in some capacity. I think that the spend over AI and the shift from analog to digital will only get stronger and get faster. So all three of these companies will benefit. It's really, for us, it's around what are the expectations around those growth rates and are those reasonable? Like, for example, with Amazon, throughout the course of this year, we were expecting that growth rate to keep notching up toward the 20% number, which it has. So long as the growth rates from an investment standpoint are the bars are achievable, we think that as you look into the medium and longer term, all three will benefit from it. But as far as Amazon specific competitive advantages, obviously they're the biggest player. They continue to iterate and provide more and more services, more one-stop shop solutions. So they're going to have an edge there. Obviously, Microsoft and Google are not standing still. But I think for us, it's as long as the overall industry trends toward capex spend and cloud spend continue to move in the right directions on a secular basis, then all three should be fine.
We've spoken to a number of guests today about the Mag 7 and whether this is a time to hold or to buy the Mag 7 or to kind of play tech and AI in different names. What do you think when you're looking at, how to play the Mag 7?
Yeah, we think that it's good to be there. For us, it's a question of what size. These companies were our top weights, a couple of quarters ago, 5, 6, 7% weights in the portfolio, but now we've trimmed those back to between 2 and 4. And we've we've exited Google, for example. We no longer hold that. And, which much smaller in Tesla, much smaller in Amazon, Microsoft. So for us, the trends continue to be the friend of these companies, but given how much they run, we think that you hold them, but just at lower weights and reallocate that to areas that have more opportunity. Like we like software, for example. We established positions some time ago in Nutanix, GitLab, and Datadog. We think those could do well. You look at Confluence results today, last night, and the stock's performance today. We think that there's a lot of opportunity there. We're going into value names at the same time. We like the commodities. We're not sure that the inflation trade is off the table.
That's interesting. I see Alcoa in here.
So, yeah, we have Alcoa. U.S. Steel, we think could be a real winner. We also like gold. So we are, we're betting on that. And value names like we added General Motors, for example. So we think that could be a great stock for as we look into 2025.
Okay,
so we think that there's a lot of money to be made
here,
a lot of opportunity, but you just got to be, you just got to have sizing is so important in this market because the magnitude of the moves and the speed of the moves is only getting faster and becoming larger and larger.
Well, I want to remind everyone.
We think that portfolio sizing is so critical.
I do want to remind everyone that we're talking to you, James Cakmak, before we've heard from the Amazon call, and as we continue to await earnings from Apple, which we expect at 4:30. I do want to take this time to have you look back to what happened earlier this week and talk a little bit about Meta Platforms and Microsoft as well, which are both holdings in your time ETF. Meta Platforms shares today ended up lower on the day after the company reported yesterday. They fell 4%. We're speaking to you Thursday afternoon. What did you make of the investor reaction to Meta's results?
Yeah, I think Meta and Microsoft are a tale of two different stories. I think with Meta, you have a situation where the capex expectations, were expected to come down. They didn't. Now there's more and more question marks about where 25 capex is. From our perspective, for us, we were thinking heading into the quarter, how short-sighted will or how what kind of a duration of guidance is Meta likely to give on the capex side? And they came out with a conservative number for the fourth quarter and kind of a conservative outlook for 2025. Our thinking is that in 2025, that capex expectation number will come down, and free cash flow will surge as a result. So I think it was more of a management of expectations on Meta's part, and but I think you had a year of efficiency with Meta. Was it last year? And then I think you can have the year of cash flow with Meta next year.
Okay, so you talked Meta. I do want to get your thoughts on Microsoft as well. Shares of Microsoft today closed lower after that disappointing outlook, down 6%. Again, speaking to you Thursday afternoon, there was a sort of a change of heart, or maybe it was solidified after the call late yesterday, Wall Street time. What do you think happened with Microsoft this quarter and looking forward to?
Yeah, from our perspective, Microsoft was kind of the worst report of last night. That outlook, given the valuation that Microsoft's at, that outlook left much to be desired. Puts into question the growth rate for the aggregate business, and given where the valuation is, we'd want to lean more into the lower valuation names like a Meta, like an Amazon that continues to get cheaper and cheaper. But Microsoft, we kind of let it ride last night, but they disappointed, and we think that there's more questions than answers following that forward outlook.
All right, James, we're gonna have to leave it there. James Cakmak, he is over at Clockwise Capital. He's a partner and technology analyst, joining us from Miami this afternoon. All right, switching gears a little bit. It's Halloween. Mm-hmm. Here's what's going to happen tonight. I'm going to rush home, do some trick-or-treating with the kids, and as soon as they go to bed, I'm going to sort of take a lot of their candy, and on its way to the trash can, it's going to stop in this special pile that's for me and my wife, and we're going to sort of, say we'll have a couple of pieces of this candy and then throw the rest away. 20 minutes later, I'm going to still be eating candy. Because
Tim,
that's how it goes.
My dad was a dentist, and he wasn't even that strict. He's still a dentist, but when I was a kid on Halloween, he was not, taking away the candy on Halloween. Halloween was like an exception to the rule.
Maybe you don't remember. My kids are so young, they're not even going to know tomorrow, I promise. How do we stay healthy, though, around the holidays? Because after Halloween, you got Thanksgiving, then you got Christmas and the December holidays. Then New Year's. It's kind of hard when the weather is cold. We go to Dr. Julia Wolfson. She's associate professor in the International Health Department at the Johns Hopkins Bloomberg School of Public Health. It is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Wolfson, am I just like a mean dad taking away the kids' candy?
Hi, nice to be with you. And no, I would not say you're being a mean dad. I'd say you're being a smart dad and a good dad. You correctly point out, Halloween is kind of the start of this really indulgent holiday season. And Halloween is kind of the, for kids, like that's it, right? They get such a huge haul of candy and you get to indulge for that one day. And I think that's great, but smart to kind of take it away and maybe exercise some of that same approach for yourself and your wife, and you have your few treats, and then you kind of get rid of the rest of that pile as well.
Okay, but here's something different that I've only come to realize in the last few years, and maybe my head was in the sand, but this stuff is like a lot worse for us than we thought.
Yeah.
Yeah. So, I mean, candy, I feel like we've known for a long time candy is not great for us. It's very sugary, but it's kind of one piece of a big puzzle of a food environment and sort of a food system that gives us a lot of stuff that's really not good for us. The majority of, if you think about what's on a grocery store shelves and all the candy, all the junk food, all those kind of really highly processed products, it makes it really hard to eat healthy. And especially, around the holidays when we have, all the Halloween followed by Thanksgiving, followed by Christmas, New Year's, all the parties, all of that. And so it's really difficult and it's really bad for us. We have a really growing body of evidence that our diet is really important for our health over the short and long term, tracking from childhood into adulthood. And we have growing rates of diet related diseases like hypertension, diabetes, cardiovascular disease that are the leading cause of death among Americans and growing.
So, Dr. Wolfson, how are we supposed to understand what foods to avoid and what is okay? Because a lot of people talk about the dangers of processed foods, but what does that really mean? How can consumers kind of understand like what's bad processed and what's simply okay to eat and maybe just, manufactured, but not the bad kind of processed?
Yeah, it's a good point. It's really difficult and it's really confusing because we have, tens of thousands of food products everywhere, just on the grocery store, in restaurants, in all kinds of stores staring us in the face. And it is really hard to navigate. So, ultra processed foods are, I'd say, kind of the right now where we focus a lot of attention because they're particularly bad in a lot of ways because they are those formulations of foods and beverages that are really made from food products with a lot of additives to enhance taste and texture and appearance and make them especially tasty for us and easy to eat and quick to prepare. But they don't really have a lot of whole food in them. So I'd say a kind of a rule of thumb is where you're looking at a product and you see a list of ingredients that has a lot of words that you're like, I don't know what these words are. These are not ingredients that I'm familiar with or that I would use in my home kitchen. That's probably a sign that this is an industrially processed food that is something that should be avoided or eaten in moderation. In contrast, they're not all bad, right? So some things like if you think about whole wheat bread on a grocery, sliced whole wheat bread, that's also highly processed, but it has some nutritional qualities, like it's made with whole grains and it's perhaps like on a spectrum less bad. So I think, you got to kind of read that food label, look at that ingredient list. When you see a lot of things that you don't know what they are and would never use or cook with them yourself, that's a sign. And then compare that with the nutritional content, looking for, is there a lot of sodium? Is there a lot of sugar? What's the fiber content? What's the protein content? Do we have any whole foods at all here? And make some judgments in that respect. But these foods are everywhere and we all use them a lot. They're really hard to avoid, full stop.
What is the recommended way to talk to children about eating healthy? Because Tim mentioned Halloween and hard. Kids, do you completely restrict candy? How can you kind of teach kids that diet is really all about balance, but there are foods that you should be avoiding more than others? Without
giving the kids a complex too.
Right. And that then finally when you're away, they go crazy because they think that they are not allowed to have it.
Right. I think, it's all, like you use the word balance, right? It's all about balance. It's all about everything in moderation. It's all about mindful eating and listening to your body. So food is not just a source of nutrients or something that's good for our health or bad for our health. Food is, part of our culture. It's part of traditions. It's part of joy and love. It's how we celebrate as a family. It's how we celebrate most of our holidays. So we want kids to grow up understanding that and loving and enjoying food and getting to have treats, but everything in moderation. So thinking about, having conversations about like, what is food that makes me feel good? Is this a real food? Is this a food that is this an apple or a carrot that actually grows, from a farm? Or is this something that was made in a factory or something, having them really engage with what are these things and how do I feel when I eat them? Do I get to gorge myself on candy in Halloween and then have a tummy ache the next day? Maybe they do, and that's not the worst thing in the world. And they learn that lesson for daily life where I'm not going to then, go off and gorge myself on candy all the time and feel bad. So I think it really is about this balance, everything in moderation, and for adults too, thinking about your diet holistically. Can we go out to a holiday party or to a restaurant and indulge? Sure. But then we want to think about how we're eating the rest of the week as well.
Dr. Julia Wolfson, Associate Professor in the International Health Department at the Johns Hopkins at Bloomberg School of Public Health, supported by Michael R. Bloomberg.